Good morning, everyone. We have this esteemed panel, which is the who's who of the world of banking and fintech and the BFSI sector. I'm sure at the end of 45 minutes, we will have the wisdom of their experience and their own story in their own organizations, how they have been able to convert their ideas into action, how they have taken clues and cues from the ecosystem. But today's topic is about banking and all those who are engaged in banking but are not banks, getting themselves redefined, getting themselves repositioned, and through this journey, how we have some of the knowledge, some of the experience to share with our audience today. The whole idea of banking getting repositioned was probably articulated more than 15 years back when it was told that in 15 to 20 years from now, banking will be required, but banks may not be required. And we are looking at disruptions, which I prefer to call as, some kind of a redefinition rather than disruption, where other people with ideas about the four pillars of banking, which we call people, process, technology, and governance, are challenging the incumbents around what we want to do in the years to come. And with this, what we are looking at is that things are getting into a flux. And as we know, all flux and confusion is the mother of all the new inventions or new innovations that happen. So what we will do in the coming few minutes is that we will take all the panelists on board initially with their views on specific areas of the topic today, which is reinventing and repositioning and recalibrating banking as we know. And from there, what we will do is that we will go towards what we call the individual aspects. So, if all of you are ready, we will start with Mr. Rajiv Sabharwal to begin with. So, as you know, Rajiv, would you like to make an opening comment, or should we straight away go towards our question and answer? All of you, all the esteemed panelists. I think you are on mute, Rajiv.
Let's go straight to question and answer, I think.
Okay, good. So, let us start with what we have decided. So we'll start with Rajiv Sabharwal, and Rajiv, let me get the questions which I have jotted down for all of you, and we will go from there. Just 1 second. Give me 1 second so that we stay in on track. So we'll start that what we are seeing in the post-pandemic era, Rajiv, is a set of new digital enablers. We are also seeing a lot of new products and processes which are coming in. So what do you think are the key changes that we are seeing in the post-pandemic era? Rajiv, you.
I think, thank you, Mr. Mahapatra. I think a lot is happening during this period. The biggest change which we are seeing is in the payment space. If you look at UPI last year had over 3 billion transactions in a month. it's an amazing number, something which, if you remember when it was launched, we never could imagine that it will pick up pace at this speed. The other thing which we are seeing significantly change during this pandemic period is the whole adoption of digital, not only by the employees of the organization, but also more so by the customers. And consequently, you're seeing a lot more of asset origination happening through digital channels. We are seeing that in certain products, close to about 15 to 20% of our new origination is happening through digital channels. Same is true for the liability side in the banks. If you look at the recent collaboration between Equitas and Google Pay, it's something which is allowing FDs to get created within 2 minutes without going through the whole challenge of account opening. Similarly, we are seeing even on the SME side that the digital adoption is growing. We are seeing this in channel finance. We are seeing this in term loans within our own organization. We all thought that digital will be primarily taken up by the retail customers, but no, it's happening at the SME end too, and it's gaining pace every day. The other big changes, if you notice, which are happening is big tech getting into payments. If you look at who are the two large players among payments today and enabling payments in certain sections, they're not banks, but they are the big tech companies who are ensuring that payments get enabled in a far more seamless manner on their own platforms. If you look at the early what's going to happen in the future, and you're seeing early signs of it. Look at what's happening on the account aggregator side. I think that can be, and Anand too mentioned it, it can be a big game changer for the future too. And I too believe that it can be a big game changer in the future in terms of how credit is accessed by people across the country. Look at what's going to happen with new NUE licenses being given out. I think payments will go to the next level with that. And hopefully the cost of transacting, which anyway is low, will further come down with more NUE players coming into it. Neobanks is the new disruption which has started to happen in the sense that we are seeing early signs of it with few people starting their beta versions where customer experience is going to see a sea change. Similarly, embedded finance, that's another disruption which is happening. If you read today's newspaper, there is talk about offline payments happening, debit card offline payments happening. So, all these are big changes which are happening. Along with that, I think the regulator is extremely worried about security. So we've seen, what has happened in the last few months with some of the players, how things have got disrupted. Similarly, we are going to see another big change happening with beginning of next year with tokenization being used to ensure that security of transactions moves on to the next level. So we are simply seeing a huge amount of change happening, largely in payments, but also on the assets and liabilities side. And with new products just waiting to be launched, what we spoke about just now, I think next few years are going to be very, very exciting for customers.
Thank you, Rajiv. That is, I think, a very comprehensive kind of a coverage. Now, coming back to Mr. Rajiv Anand. Rajiv, always a pleasure, connecting. I think we are connecting after quite some time. But you just heard Mr. Sabharwal mentioning a range of things, right? From tokenization to payments, to asset origination and digitization of the liability origination, big tech coming. When all these are coming, there is also a buzz, which I began by telling that whether branches are required, because as we know, and Mr. Sabharwal is also quite familiar with that. Whatever we do, we architect and design those things around the branch network, and even the selling network is all organized around their coming and reporting to a unit head and all those things. So many times the funeral of the banks have been written, rewritten, and rephrased, but branches have survived. As an industry leader, where you are seeing this branch banking, how it is getting redefined, and or how you are doing it yourself, if you may, and at the same time, looking at whether fintechs are denting the brick and mortar offering, or do you think that it is only getting redefined, but more of it is coming? Rajiv.
Mr. Mahapatra, nice to see you again. I completely agree. I mean, I think if you Google death of branch banking, I think people have been talking about the death of branch banking since the early 90s, and not just here in India, but across the world. Branches continue to thrive, although the pace of growth, particularly in some of the Western countries, the pace of growth of branches has certainly reduced. I think look at it from an Indian perspective. We are a diverse nation. Financial services is complex. Financial literacy is relatively low. And I think, yes, a large part of the country has moved to smartphones, but there's still somewhere in the vicinity about 200 to 300 million people who are still on feature phones. So I think we will continue to be let us say, a two-paced nation where you will see very fast adoption of digital in one part of the population, but the physical presence or people going to look for the human touch in India will continue for many years to come. And so therefore, I think the way that banks have thought through branches is, yes, the number of new branches in large metros, etc., has the rate of growth there has certainly slowed. But as you think about the 600 odd districts in the country, many of these are sort of as affluence has come to many of these centers, those areas have become bigger as well, and therefore the need to serve the customer either close to his office or close to his home has become critical. Second is customers make choices. For example, we have the branch channel, we have the ATM channel, we have internet banking, we have a call center, and we have mobile apps. All of them are thriving. And what we are seeing is the customer makes choices. Obviously, when he wants to withdraw money, he would go to an ATM. But if he wants to talk about more complex products like getting a home loan or buying mutual funds, he would want to meet a relationship manager either in his house or at the branch. And you do the more sort of mundane transactions, like P2P transfers. Rajiv spoke about UPI payments. So P2P, P2M transactions are now being done on the mobile. So therefore, I think what we've got to understand and realize is that the customer is making these choices in terms of which of these channels he's using for different types of financial services needs. And as a universal service provider, it is incumbent and imperative upon us to be able to serve them across multiple channels. And I think, yes, over a period of time, I think the importance of branches will certainly reduce. But I think what banks are also doing is reimagining the branches. And so therefore, where branches were more operation oriented, more admin oriented, all that is now being taken care through technology. For example, the India Stack, your ability to identify your customer through biometric authentication through Aadhaar in the branch becomes that much easier. So some of that stuff is going to get eliminated, and people in the branches will become more relationship oriented. So much so that in Axis Bank, what we used to call our front office people customer service officers, now we call them branch relationship managers. And I think there is a subtle shift in terms of the way that they think about their role, not necessarily about service, but about building that relationship with the customer. And so therefore, I don't think, at least in the Indian context, branches are going to get irrelevant anytime in the future. But I think it's going to be an amalgam of technology and the human touch, which banks will use to serve different types of customers across multiple channels.
Great articulation, Rajiv. Let me come to you, Mr. Rajgopal. As you heard, I think the sound vibes are coming that yes, all these writings are clear on the wall. We have payment service providers, we have asset originators or third-party platforms. At the same time, what we got from Mr. Rajiv Anand is that, look, branches may be redefined, branches may be repositioned, but there will be a different tone from the top, but they will be there. So, and the same discussion, I can also tell our audience that when I discuss as a member of the governing council in the innovation hub of Reserve Bank of India, or in the NABARD, which is trying to bring, last mile kind of digitization at the cooperative sector as well as RRB sector, we are listening to similar sound bites. So my question to you is that the difference between idea and a product is technology. It is the bridge which takes an idea into a product or a reality. What are you seeing are the emerging technologies or the technology frameworks or the technology infra redefinitions, which the bankers and people interested in banking should know? Yours.
Yeah, thank you very much. Actually, I mean, in this conversation, I will learn more than contribute because, there's so much of domain expertise here. I will do my little bit here. First of all, I look at this conversation more like, first as a customer and then as a service provider. My own personal experience is that since 1996, I have been to a bank branch only 3 times. 2 times for my company's sake, 1 time for my personal use where, I had to go and pick up my home loan documents because I closed my home loan and they won't deliver it to my home. So in my view, banking actually set the technology trend in this country. It's been internet banking. I've been using internet banking, at least personally, from 1996 onwards. But what happened that I saw, I've worked very closely as a vendor to many of the banks. I think banks got preoccupied with security and compliance and also cost of operations. And this preoccupation actually gave some kind of bandwidth for the innovation to happen outside the banks rather than within the banks. For example, I don't see a payment wallet as a technologically great product. It is a bank could have done it very easily. It's just that it happened outside the bank. So in my view, our own role as a technology provider is that we don't actually help the bank in terms of what to do because there's so many great examples across the world. We solve this piece of how to do it. So basically you have an idea, let's use technology to actually accelerate and then deploy it and so that we can enable it in terms of the agility and stuff like that. So I think the idea now at the banks, at the customers that we discuss is to stop building it in-house and then start assembling these pieces because it is very difficult to sustain a product or a service differentiation for long because there is so much of innovation that's happening beyond the bank itself. So what I would enable a banker or my customer is that how can I actually ensure that I can pick up these pieces from across board, assemble them together and offer it to my customer base? Because I think as a bank, the biggest strength the banks have is the customer base, which is a very expensive thing for anybody to acquire. And the second thing is the ability to run scale of operations. So I would always talk to a banking customer that, let's leverage these 2 strengths that you have to operate at scale and to operate and to work with a large customer base, and then see if we can assemble pieces from products and services that are outside the banking sphere and then bring it into one integrated, seamless experience to the customer. So that's how I see technology playing a role. I see technology playing a role of a kind of a Lego building blocks, where we put these things together so that we deliver a finished product to an existing customer base and then increase the customer base. That's how I see technology playing a role.
Thank you. Thank you. What I am getting from whatever you told is that technology players will work towards making technology as an orchestration tool. In addition, I think what you are mentioning is that the bankers have to increasingly work towards becoming technology agnostic. But when we look at technology being just a slave or a servant for us to achieve our corporate objective, my next question is to both Rajiv, both Rajivs, that is Rajiv Sabharwal and Rajiv Anand. There are two challenges, what I see. First one is that prescription of technology or product is likely to be more contextual. If you are, for example, doing a WhatsApp chat, you'd like, and you decide about banking, you should do the banking there. If you are going to a healthcare provider, probably you will like that this banking related to healthcare or banking that could be done there, it should be done. Now payment is getting ubiquitous. The other thing that is also happening is that, you know, many times we are looking at entertainment, leisure, and media as becoming increasingly getting intertwined with banking and financial services. So my question to both of you is that as we do this embedded banking, there is a challenge of people. Wage inflation is in the up. Now, I was part of some of the hiring at the leadership level. We are finding exceedingly difficult to get the right type of people. Reskilling people into being, you know, not just technology fence sitters, but technology, technology adopters or technology facilitators. That is also creating the problem. So how this? So my question is to both of you that please wear your leadership hat and please tell me and the audience that we have today that how, as a leader, both of you are approaching this this thing that we are seeing. First, Rajiv Sabharwal, then Rajiv Anand. Yours.
What you mentioned is true. Embedded banking is becoming, the order of the day. I won't say it has gone to the level at which we can say it's got the lion's share, but the way it is growing, I think it will become larger and larger. And if you would notice that ultimately it will be a partnership between people where the customers are and people who can provide banking services. So it will be either payment players and banks, or it will be social platforms and banks. So you will see a lot more of collaboration happening on that side. As far as the resource crunch is concerned, it is true. I think if there is one skill which the country is short on, and everybody is seeing this, not only you, we all are seeing this, that it is very difficult to get the right technology resources, and it is equally difficult to retain them. So because the number of options are growing. What it is leading to is, everybody trying to innovate on, how they can create a much more sustainable, let me say, set of people within their technology domains. I think no longer technology people are at the back end. It's a misnomer if you say that's a back end function. It is actually a middle or a front end function, because they also need to experience, what customers are demanding, get a feel of what's happening for them to create products which customers would like. And it's like, the resurgence of the engineers. We used to see this in the developed economies only. As far as India was concerned, it was more of the MBA domain rather than the engineers domain. I think some of that is changing at this point of time. And a lot of companies are doing stuff so that they can get fresh people, train them, and then retain them over a longer period of time. I think, for example, we also are today hiring more people from IIT, much more from IIT than we were doing a few years back. And we are happy to, get them early and retain them over a longer period of time. The other is, I think every organization, the pace at which it is changing is leading to a state where the existing people in technology are getting great experience in terms of transforming the organization or transforming the customer experience. So a lot more is happening. Parallelly, along with that, I think there are a few other functions which are also seeing a lot of transformation happening, which is the digital teams which are working with the technology teams to provide better products and services, and the analytics team, which are really also enabling how the offerings to our customers can be far better. So clearly a transformation is happening, and everybody is finding different ways and means of attracting talent and then retaining it. The challenges are real, but I think all of us are finding our own ways and means of managing that.
Thank you, Rajiv. Anand. In addition to what Rajiv Sabharwal just now told, please respond to my question, but please also add, because what many times we find in organization is that the passion of the leadership, because what Mr. Sabharwal just now told is that so far, many of the leaders were thinking that IT is something of an unknown territory, or digitization is to be done by specialists. Now, I always tell in my speeches is that appreciation of digital end-to-end is a survival skill for the leaders. So how do you think boards are changing? How do you think the advisor domains are changing? Please, if you can include in addition to whatever Mr. Sabharwal told. Rajiv, yours.
So I think, for organizations to win this battle, the digital battle, so to speak, I think first and foremost, one has to become a digital native organization. In the same manner that 10 years ago, no bank would have ever thought of outsourcing their private bank RMs or corporate bank RMs. Going forward, the question of outsourcing your technology, I think, will not even be a question that is being asked internally. So therefore, from our perspective, we want to build as much as possible on a proprietary basis. So we have built a team of about 1,000 odd people in technology, digital, UI, UX, data scientists, and so on and so forth, to be able to help us become a digital native organization. And I think that is, to my mind, that is really the future. And the more that you are able to build stuff on your own, yes, there will be failures, but I think your ability to create unique propositions then improves considerably. The talent shortage that you spoke about, I think, is real. The good news is that the breadth of availability of talent is improving. The bad news is that they don't want to work for traditional organizations like banks. So what we are doing, for example, we have launched something called gig opportunities, where we are getting people to work for us on a freelance basis. So we now have something in the vicinity of about 2,500 people who are working with us on a freelance basis. They get the benefit of working in large organizations on large transformational projects. We get the ability to attract some of this talent, maybe on a short-term basis, maybe on a medium-term basis, but just goes back to the point I was making. We are increasingly working towards becoming a digital native organization. Finally, the point that you made on the board, etc., is very valid. And one of the things that we are doing in Access is every Friday evening we have a digital masterclass. So therefore, we've invited the board and the top 100, 150 senior managers of the bank. And, and we get domain experts to talk to us, about cybersecurity, about UI, UX, about design, and so on and so forth. The last two sessions really have been about coding. So we are also learning some basics of coding at this point in time, and trying to get an appreciation of coding. It also helps you think in a logical manner. Some of us are probably a bit too old to learn new tricks, but I find that whole exercise very, very fascinating. And I must also say that the attendance to this technology masterclass, so I think we've been running it now for about 2 months or so on every Friday evening. The attendance has been excellent, not just from the executives, but from the board as well.
Great. I think thanks for sharing this. And so let me go to Raj. I think Raj, as you heard some of the sound bites that from both Mr. Sabharwal as well Mr. Anand, and what he was referring to as digital native. Today's banking customer or financial service customers, which I articulate in my writings and all, can be put into 4 buckets. The first bucket is the digitally native bucket, who think, who work, who have not known anything other than digital. Second are digital migrants, which are people like us who have migrated thinking that digital is beneficial. Then the third one is the digital fence sitters. They are dabbling with an ATM transaction. They are dabbling with some few online purchases, but they are not fully convinced. Then there is a fourth bucket, which is digitally averse. They don't want to do anything. They call the branch manager. They ask them to do everything. And the wealth distribution is, skewed towards digitally averse. So as the bankers are doing, I saw your, when you told about that you are an orchestrator, you are trying to make people, but at the same time, I'm getting a challenge from both the industry leaders. One is telling that we are building our proprietary stack because we don't believe that in a fragmented manner we can be sure. The other one is telling that, yes, everybody is working. I'll work with a partner ecosystem and I'll take partner technology. So orchestration is not the challenge, but user experience is a challenge. Where you see in terms of as a part of the vendor ecosystem, what are the shifts that you are seeing when you interact with the leadership of your client organizations?
Great, sir. So I actually have please don't look at it like a contrarian view, but it's an experience. Whenever we interact, we get this constant pushback that banking is in a very highly regulated industry, and it's not easy for a bank to actually leverage consumer data the way a big tech company uses. I don't think it is possible for a bank to build a team to actually match a big tech company and match them with, user insights, because we don't have all that info, because the big tech companies actually know what you do with your spouse. They know so much about you. It is not possible for us to actually go and build a team which will go and actually compete with them. In my view, I think for the sake of agility, it is far more easier to collaborate than to compete. So that makes it far easier to actually build, because when we were discussing the skill sets and all that, the real big, skilled people are not going to come to a bank. They will want to go join a Microsoft or a Google or Amazon or wherever. They would not come to you, and you will struggle building skill sets. So my stand remains that we need to collaborate rather than build, because it is far easier. More importantly, I think we lose the agility piece, because transformation is something that takes time. It's like, a caterpillar becoming a butterfly. It doesn't happen overnight. It's a pretty important thing, that it takes time to actually transform. And it's very, very difficult for a bank to transform, primarily because it is in a very highly regulated environment, because the whole ecosystem has to change. It is not just that, a bank thinks that we are now digital and they can do anything. They can't do, because as a consumer, I feel that my data is much more safer with a bank And I will actually worry if bank tells me that, no, I'm going to leverage all your data and then I will personalize and I'll customize the operations and all that. But in the same breath, what I would like to help my customer is that not look at the entire customer base in 2 or 3 buckets as it is done now, but in terms of looking at them as maybe 20 different buckets. In the sense, please micro segment your customers and see if we can actually deliver more customized services, more customized products to a segment of customers, rather than trying to go and achieve the personalization that a big tech company can do, because we will never get that amount of data. We will never be able to compete them in the same breath. This is my view, sir.
Thank you. I think it's nice. Let me come to Rajiv Anand now. Rajiv, you mentioned about the 2 great initiatives. One is that, asking people to collaborate. You told that you are doing a proprietary stack, but at the same time, you also told that, you have kind of an open university where, seniors learn. At the same time, people who are interested in Axis Bank as a brand or Axis Bank as a franchise can come and freelance and collaborate. With this in mind, as we know, in fact, yesterday I got a call from someone who is in a startup ecosystem. They were doing through one of the big data platforms, a product where fixed deposits could be opened immediately. So he was worried that immediately it caught the regulator's attraction. That what is going on here, whether we are, furthering the interest of the big data companies who are known as data colonizers and all. So in this atmosphere where privacy, where data security, where collaboration, everything is in a flux. I told right at the beginning that probably I take it that this is the hot, kind of situation where new ideas come. So what are the 2 new ideas which your organization or your personal experience you have seen are likely to be making some news?
So let me talk about the way we are thinking about the future. I think it is not just about sort of 1 or 2 solutions or products that are critical for you to win in the future. I think what we are really focused on today is to build out our capabilities. Like I was mentioning, I think building that internal capability is, I think, super critical. And I think once you can get that done, then being able to create, we do have something like about 300 data scientists working in Axis Bank, and we've been using data from an underwriting perspective on the retail side now for almost 10 years. So therefore, if you see, the manual intervention on underwriting on the retail side is minimal. Most of that goes through a rule engine, and the rule engine is basically telling you, go, no go. Maybe 5, 10, 15% of that there could be some manual intervention through, there could be manual interventions. And so therefore, in that sense, we do have the data. We are now building out our, capabilities. We've built out to make life simple as well, we've built something called a web page called Sub-Zero, where the ability to create, a page becomes very easy. The button is already there. There are 16 different types of buttons that you can, the developer can pick and choose. And so therefore, to that extent, his ability to create internal products or solutions on digital platforms becomes much easier. The time to market, becomes much easier as well. And there is a standardization in terms of look and feel. And so therefore, and everything that we are building for is both internal and for the ecosystem, because most of what we are trying to build is 1, cloud enabled, and 2 is API enabled. And so therefore, to that extent, our ability we are also ensuring that our ability to work with partners becomes that much easier. And I think one of the issues that we are certainly grappling with is in partnerships, particularly with big techs, is that that you're giving away the front end experience to, we spoke about Google Pay, for example. Ultimately, Google Pay is sitting on rails that have been created by the banking system, right? I mean, and so therefore, your UPI handle on Google Pay will be Rajiv at OK Access or Rajiv at OK ICICI or whatever it is. But ultimately, in a sense, the bank is getting disenfranchised in that relationship. And so therefore, how do banks think about this? Do you partner or do you compete in an environment like this? Yes, we will partner in some places, but we will certainly compete in others.
Oh, very nice. I used to call it in SBI as disrupting the disruptor. We always used to say that, yes, the existing incumbents have also tremendous power in terms of, spoiling the game by either innovating themselves or, collaborating with a competitor. So my last question to Rajiv Sabharwal, that what are the two things do you think that, in your opinion and in your client base, are redefining the way that you used to, give your offerings to your stakeholders?
Sorry. So there are things, which have changed. As I say, we can pick up one or two items, but more important is, how are you approaching this? What's your approach on going forward? I think two big areas where changes have happened. One is obviously in terms of, how are you responding to customer needs? Are you listening to customers, and how quickly are you responding to them? So there we have seen a lot of stuff happening using bots, where servicing has moved and now sales have moved to those bots. Similarly, we've tried with voice enabled loans, and that's also seen some good pickup on that side. We've also seen, as I told you earlier, we all thought that it's only the retail customers who are interested in digital loans, but we have seen this strong pickup on the SME side, and products which people felt would not work on the digital platforms are working today. So one is this whole change which is happening on the customer experience side. The other thing I think which is changed is, how have you changed the organization inside? How have you taken up the digital quotient of all your employees? Do they understand products and services as well? And what are you doing to help them make this transition? I think that's the big change. A lot of costs also lie within the organization. How much of robotics have you used within the organization? How have you completely digitally enabled services within the organization which were earlier not there? Even certain functions, like we all used to think that retail collections can't be digitized, but that's also changed in the last couple of years, where organizations have moved to taking this also onto completely digital mode. So I feel the two big changes are how we are responding to customers outside the organization, and what have we done within the organizations to be able to understand technology, digital much better, become leaner, and also become, let me say, more agile in terms of responding to the needs.
Thank you. I think we have run out of time. To sum up, I think we got some very, very, very interesting, as well as diverse kind of views in this interaction. We saw at the same time that we must change internally as well as externally. We must build our own capabilities as we collaborate. We must orchestrate as we depend on our own employees, we must innovate on our recruitment and onboarding issues. We must be cognizant of our own limitations as we are cognizant about the abilities of the ecosystem. Very, very interesting discussion. I wish we had more time. If the audience has any questions, you can send it to our organizers, and I can assure you that all of us will be happy to take up a few questions and answer and mail it back, which will be put on the website of the conference. With this, I think it is time to hand over to our organizers, and my personal thanks to Rajiv Sabharwal, Rajiv Anand, and Rajgopal for your very insightful comments. Thank you very much.
Yeah.
Over to you.
Thank you. Thank you.
Thank you so much.
Thank you, Mr. Mahapatra.